Welcome Investorholics and friends to another ETF Spotlight review. Today we'll be looking at CNEW, which is the VanEck Vectors China New Economy ETF. Investing in one of the largest and fastest growing economies in the world could be a great strategy to build your future wealth. Traditionally, economies like China have been dependent on financials, energy and materials. China is a country focused on transitioning its economy to be consumer-led. There are four forces behind this transition, in which consumer-orientated sectors are gradually replacing heavy industries and low-cost manufacturing as a country's economic engines. Number one is affluence and the growth of middle class. Number two is world-leading digital technology. Number three is aging population, so like the healthcare sector and that type of stuff. The fourth area is there are more millennials than anywhere else in the world. So they're the four drivers of the Chinese economy. So stick around and let's have a look at CNEW to see if it's worth investing in. Well, hello there, Investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, so CNEW gives investors a portfolio of the most fundamentally sound companies in China, having the best growth prospects in sectors making up the new economy. As we sort of mentioned before, technology, healthcare, consumer staples, and consumer discretionary. CNEW aims to provide investors investment returns before fees and other costs, which track the performance of the index. So the CSI Market Grader China New Economy Index, quite a mouthful, aims to select the 120 companies in China with the best growth at a reasonable price, with good attributes, which are considered the best drivers for long-term capital growth. Companies are selected based on the strength of 24 fundamental indicators across the four categories, which are growth, value, profitability, and cash flow. Have a look at the PDS for further details. This one you definitely have to understand a bit about how it functions. Include an extra link or two in the description to the actual index provider, so just a bit more background. So this one's designed to serve as a basis of investment funds, provide access to investors to some of the most promising stocks in China. So just gives you a little bit more exposure to the faster growing sectors, I think, and quite possibly in the long term you'll have much more growth out of these companies. Why? So as I sort of mentioned, it gives you access to a portfolio of China A shares via the VanEck China expertise in a single trade on the ASX. As we sort of point out, you've got a portfolio of 120 of the most fundamentally sound companies with the best growth prospects at the forefront of the China's transforming economy. Only includes companies from technology, healthcare, consumer staples, and consumer discretionary sectors. So it excludes all the heavy industries and all the rest of that type of stuff. So it's definitely a different way to look at the Chinese economy. Okie dokie, let's have a look at the net asset value. When I checked it, it was $8.43. Trading above that today, marginally at $8.50. Market cap of $77.4 million. We have a management cost which is pretty high, but I mean this is kind of like an active type ETF anyway. 0.95%. We have a distribution annually, and that occurs in July. Dividend yield is roughly 0.88%. The CSI Market Greater China New Economy Index, as I say, it's a smart beta strategy that seeks to follow the most fundamentally sound companies domiciled and traded in China. All A shares listed in the Shanghai and Shenzhen stock exchanges covered and rated by Market Grader that are not ST stocks. So, you know, like I said, we're sort of their focus on the consumer discretionary, consumer staples, healthcare and technology sectors. So you sort of all those old world type companies aren't included in this. So that's why hopefully you should be getting some better growth. So this ETF gives investors exposure to the Chinese economy through an investment in 120 of the fastest growing and most fundamentally sound companies in China. The Chinese economy is set to become the largest in the world over the next few years. Therefore, it's where most of the growing companies will come from. However, China, as I sort of mentioned with the other Chinese ETFs, aren't without its risks, so caution is advised. So, you know, transparency is always a problem in China. So hopefully, you know, with the screens that Market Grader are using, we can find some companies with better governance and things like that to actually help us out with the transparency side of things. So if we're looking for alternatives, we'll also have a look at IZZ, and we touched on CETF in a previous spotlight. So if you want, go back and have a look at that one. I'll put the card in the top right hand corner. Okay, so we've got the top 10 holdings. It's rebalanced every 6 months. Look, to be honest, I've never ever heard of any of these companies, which is not surprising because they're not major international companies, although they're sort of the smaller companies. This fund came into existence on the 8th of November 2018, so it hasn't been running that long. But as you can see, it's had a pretty good performance over the time. So we're looking at total return since inception per annum is just over 37%, which is very respectable when you compare it to the annual returns of other broader based indexes, you know, like the ASX. I think that all investors need to have some emerging markets exposure in their portfolio. I mean, how much exposure do you need, and how do you get it? Things that are really personal, specific to the investor, and you know, everybody takes different approaches to that. You know, you might want to consider taking a broader emerging markets option, and you know, in that case you'd buy IEM, which is tracks 20 of the global emerging markets all in the one ETF. You know, I mean, do you want something that just looks at Asia focused one? You know, you could maybe have a look at buying ASIA Asia, or you know, if you're a bull on China long term, you might want to have a look at IZZ. You know, as I said before, we already had a look at CTF or CNEW, which is the one we have a look at today. I think that CNEW is a good option if you have the stomach for periods of extreme volatility over the long term. If you go back and have a look at the long-term performance graph of this index, you know, it's got a 15 15 to 18 year history now. There are years where it's sort of down 100%, and other years where it's up 200% or down 50% or up 30%. So it's quite volatile. But over the long term, you are getting some really good returns out of this index. But if you don't have the stomach for some ups and downs, this quite possibly isn't one for you. But like I said, I think everyone really needs some emerging markets exposure in their portfolio. So if you're not really the type of investor to stomach that volatility, maybe have a look at IEM, which is the broader based ETF. But definitely worth having a closer look at CNEW, even if it's just for getting into researching these things better and just getting a bit better understanding of how these all operate. But yeah, definitely give this one a look. This is something I'll be considering over the long term anyway to add to my portfolio, because I don't really have any sort of emerging markets exposure. So I think this is something that I'll actually have a look at. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.